You often hear people talking around the braai how expensive Naspers is trading at much more than R1,000 per share, or Absa trading at R200 a share, so expensive, while FirstRand is only trading at about R50 a share, so they think it's cheaper, and they also think Absa is a much bigger company. But I want to show you that the price of the share does not indicate how valuable the share is, how expensive it is, or how big the company is. If we look at a theoretical example, you can see that in this case we took take two companies, but they're exactly the same company. All we did is that the one company issued more shares than the other one. So if we look at this theoretical example, Company A has issued 1 billion shares at 10 Rand each. Company B has issued 10 billion shares at 1 Rand each. So they are both worth 10 billion. Both of them make a profit of 20 million rand. Both of them pay a dividend of 10 million rand. Per share, the dividend will differ. Company A will pay 1 rand per share on a 10 rand share. Company B will pay 10 cents a share on a 1 rand share. So the dividend yield is still 10%. So you can see both these companies exactly the same size, equally valuable. Their price earnings ratio is the same, 10 times. So you can see when we come to PE ratio, that is where we determine which shares are expensive and which shares are cheaper. So we'll get there later. But if we just look at an example, and we will look at FirstRand and Barclays Absa. Now, in the case of FirstRand, its share price is 47.20 Rand. It has issued 5.6 billion shares, and that gives it a market cap of 266 billion rand. Now, market cap is the value, the market value of the share. It's just the share price multiplied by the number of shares. The P ratio of FirstRand is 13.9. And this was all at 4 November 2014. Barclays share price was 172 Rand. It has 147 million shares in issue and gives it a market cap or market value of 146 billion Rand. So you can see that Barclays Absa is a lot smaller than FirstRand. Its P ratio is 11.8. That means that it is actually cheaper than FirstRand, who's got a P ratio, price earnings ratio of 13.9. So in this case, FirstRand is by far the biggest company, and it's the more expensive company.